Intel's Q1 FY26 results deliver an absolute shockwave to the market. Total revenue slammed in at $13.6 billion, up 7% year-over-year, crushing the street's consensus by $1.2 billion. For the sixth consecutive quarter, Intel has completely shattered its own guidance. Inside that $13.6 billion, three segments power the machine. The Client Computing Group held the line at $7.7 billion. But data center and AI was the real shock, exploding 22% to $5.1 billion, a massive $700 million above what analysts modeled. Intel Foundry added another $5.4 billion. Gross profit hit $5.3 billion, expanding the margin to 39%. Operating expenses were $8.5 billion, heavily weighed down by a brutal $4.1 billion in restructuring charges. But out of that financial smoke came the ultimate mic drop. Intel delivered a 29-cent non-GAAP EPS, absolutely vaporizing the analyst's 2-cent estimate. That is a staggering 1,350% earnings surprise. Look at this 9-quarter trajectory. This isn't just a recovery. It is a resurrection from the abyss. Total segment revenue has violently clawed its way back to $18.8 billion. Data center and AI is a runaway train, surging from $3.8 to $5.1 billion. Intel Foundry jumped from $4.4 to $5.4 billion. But the absolute spectacle lies in the operating margins. While the PC segment holds an iron grip at 33% and AI strengthens to 31%, look at Intel Foundry. After collapsing to a catastrophic, bleeding trough of negative 134% during the peak of its restructuring pain in Q3 2025, it has violently snapped back to negative 56% by Q1 2026. Fueled by surging yields on Intel 4, Intel 3, and the dawn of 18A, the bleeding isn't just stopping, it is rapidly reversing. The trajectory is unmistakably upward. Intel isn't just rebuilding a company. It is forging the silicon backbone of American technological sovereignty. Their master plan converges on a colossal $400 billion total addressable market by 2027. Starting with the foundation, the Client Computing Group commands roughly 70% of the traditional PC CPU market. Protected by decades of deep x86 software integration, and now energized by the AI PC supercycle, operating margins have recovered to a solid 33%. The data center and AI division holds approximately 71% of the server CPU market, generating a 31% operating margin, anchored by gaudy 3 accelerators and next-generation Xeon processors. Then there is Intel Foundry, the high-stakes long game. Currently at a negative 56% operating margin, it is targeting the $100 billion external foundry market as the only leading-edge logic fab on American soil. And the government is stepping in. Intel received the largest single CHIPS Act allocation in history at $8.9 billion. TSMC received $6.6 billion. Samsung took $6.4 billion, and Micron got $6.1 billion. Washington is not just watching Intel's comeback. It is bankrolling its absolute supremacy. 5 structural pillars. 1 relentless mission to reclaim the crown. First, the Agentic AI shift. As AI becomes autonomous, data centers are rewiring from a 1 to 8 CPU to GPU ratio straight toward 1 to 1 parity. Global CPU demand is poised to explode from 30 million to 120 million cores per gigawatt, already driving server CPU prices up 15%. Second, sovereign protection. The U.S. government's $8.9 billion equity investment, acquiring a 9.9% stake, has miraculously quadrupled into a $36 billion paper return, a 300% gain for taxpayers in under a year. Third, the 14A mega contracts. Microsoft locked in over $15 billion, and Elon Musk's Terafab is targeting 1 terawatt of annual AI compute production. Fourth, ruthless capital discipline. Intel cut 19,400 positions, dropping headcount from 102,600 to 83,200, driving a 9% reduction in operating expenses to a lean $3.9 billion. Fifth, pure hardware muscle. Panther Lake slashes power consumption by 64%, while Gaudi 3 delivers 33% higher I/O connectivity than NVIDIA's H100. Intel isn't catching up to the frontier anymore. They are redrawing the global silicon map. In 2026, the foundation turns to concrete. The 18A node is now in high-volume manufacturing at Fab 52, weaponized with ribbon FET gate all-around transistors and power via backside power delivery to eliminate power leakage at the subatomic level. The Clearwater Forest server processor, packing up to 288 power-efficient cores, ships in the first half of 2026, while the Crescent Island SAE 3P GPU begins customer sampling. Moving to 2027, the ultimate financial turning point, as Intel Foundry targets its first-ever break-even operating margin. The 650-watt Diamond Rapids beast hits the racks with 16-channel memory. Simultaneously, the 14A node matures faster than 18A ever did, pulling in giants like Broadcom for deep evaluation. By 2028, a multi-billion-dollar annual advanced packaging backlog cements Intel's dominance. Coral Rapids reintroduces simultaneous multi-threading, and rumors of Panther Covex variant scaling to an unbelievable 512 performance cores are circling for extreme cloud workloads. This is a conquest plan. To forge a war machine, you must cut the fat. The expense chart proves a surgical, unapologetic discipline. Spending held steady before exploding to $11 billion in Q3 FY24. The single most agonizing, expensive restructuring quarter in Intel's modern history, with $5.6 billion in one-time charges. But that pain bought lethal efficiency. Core research and development is now compressed to $3.38 billion. Marketing and administrative costs are starved down to a razor-thin $1.04 billion. Strip away the $4.07 billion in one-time restructuring noise from this quarter, and the truth is revealed. Intel's core operational engine is nearly 10% lighter year-over-year, infinitely faster, and ready for war. Negative 128% net income margin, a number that will live in semiconductor infamy, and an abyss Intel will never revisit. Starting from a 44% peak in early 2022, profitability eroded until the darkest hour arrived in Q3 FY24, a catastrophic $17 billion net loss. But from that nadir, the recovery has been breathtaking. By Q3 FY25, net income surged positive to $4.3 billion at a 31% margin. And that $4.3 billion loss you see right now in Q1 FY26, it is a total illusion. It is almost entirely driven by non-cash goodwill impairment charges tied to Mobileye, not operational deterioration. The actual revenue-generating engine is printing $13.6 billion. They are clearing out dead inventory and converting accounting losses into real cash. The fundamental business is thriving. The era of missed targets is dead and buried. This chart is the visual definition of a company that found its absolute bottom and launched a relentless counterattack. After a grueling compression phase, the recovery has been steady and undeniable. Pushing past the $13.6 billion mark this quarter, Intel didn't just edge past Wall Street's consensus. They obliterated it by a terrifying $1.2 billion. And they aren't slowing down. Second quarter guidance came in towering almost 10% above what analysts had modeled, backed by a massive $37 billion war chest in cash. Forward estimates show revenue accelerating straight back toward historic peaks. 6 consecutive beats. The inflection is real, and the momentum is absolute. This is the chart that forced Wall Street to completely tear up their models. After years of chaos, the earnings trend line has formed a clean, vertical staircase of profitability. Intel delivered 29 cents of pure profit against a market consensus of just 2 cents, a massive 1,350% earnings beat. The financial elite had completely mispriced this machine, blind to the fact that Intel was turning written-off inventory into massive cash flows. The market's realization was violent. Intel stock exploded 24% in a single trading session, its most colossal one-day surge since 1987, shattering its dot-com era peak for the first time in over a quarter of a century. The skeptics are capitulating. 49 analysts, a fiercely divided battlefield. While the consensus sits frozen near $80 with 30 hold ratings, the extremes are at war. 14 buys clashing against 5 sells. The bulls are charging toward a maximum estimate of $112, a massive 32% upside, fueled by the Agentic AI revolution, 18A validation, and Intel's untouchable status as America's sovereign foundry. Heavyweights like Evercore, Roth Capital and Citi are planting their flags at $95 and beyond. But the bears are still growling, pointing to sky-high P/E ratios and Diamond Rapids delays, dragging their minimum targets down to a brutal $45. Make no mistake, Intel at these levels is not a short-term trade. It is the ultimate high-stakes bet on the rebirth of American silicon. The next 4 quarters will dictate history. A quick reminder, this analysis is purely informational, not financial advice. Always do your own research before making your move. If this deep dive gave you the edge, hit like, subscribe, and drop your verdict in the comments. We decode Wall Street's biggest stories every quarter, every time. See you on the next one.